Good day and welcome back and another Talking Technical, and thank you for all the emails on the requests. It's nice. Some people post it on Twitter for us, but some drop us an email. Unfortunately, we cannot do all the requests because some viewers send in 3, 4, and we usually just cover one of it because we want to cover as many requests as we do receive. Well, let's kick off with the first one. Is Standard Bank. And this viewer would like to know, Frans, can I hold on to the share? I've got it now for a few months. I'm happy with the performance. And where must I sell if I want to sell? Well, this is a daily chart. And he didn't say that he's a monthly or a long-term investor or that he is a trader, but I'm going to look at the perspective of what we've seen over the last couple of months. Well, first of all, let's have a look here. You can see that the share around 142 Rand, in October, it rallied all the way where it's now close to 182 Rand. So the share had one phenomenal run. First of all, the positive side is, let's see what we're seeing here. We see a inverse head and shoulder here. First of all, I think it's maybe now too late to buy the share because we already had one beautiful rally. But for the viewer that would like to know if he must hold on to the share, well, there's the neckline. Excuse me. The neckline sits at 182.71. Now, if that plays out and that turns into a support, the first target is a very tiny little conservative target to the top is 187.06. But look at the target to the top if it plays out in full. And I usually use the head to the neckline as my guideline. And if it breaks above the neckline, I just extend it all the way out to 194.68. So this can be a beautiful stock to watch, but then it must break above that line. And that will be a continuation of a beautiful rally that we've seen. There's also maybe a possibility of a ascending triangle. Look at this chart here. If you look at all the support lines here, there you are. Let's just take that out, not to confuse you. There you are. Look at all the higher lows. Every time that the share got close to the support line, even at that point, when it broke that line, there was a dragonfly candle that tells you that there was some investors buying the dip, keen to hold onto the share and just rally it up all the way. Look at this beautiful, strong, bullish candle. So everything is still positive. The only thing that will worry me, if we can see that this support line turns into a resistance, then this ascending triangle will be wiped off the table. That will be negative. But where can it go to? If it breaks below 176 Rand on the dot, that will give a warning signal. But it can go then down to, let's give you the levels, 173.20, 172.20, and even maybe as low as 170.69 on a minor pullback. But for me, there's always a possibility of maybe a double top. But that is not a scenario that's going to play out quickly. There's the low of that. Let's quickly get that low there. There's the low. And this double top scenario, if it does play out, you've got ample time to make up your mind. And that will only come into play if the share starts to go below 163.39. Then we'll have maybe a double top. There's the top. There's another top. And if the share goes down and it reaches that, then it can maybe trigger a sell-off all the way down to 145. But that will be strange if that happens because it's a strong company. I know the financials are quite strong. Nothing is wrong there. So let's hold on to the share. But of course, if that support line breaks that I showed you there, maybe just be a little bit nervous. Next one is Lloyds Group, the bank. And they are listed on the New York Stock Exchange. And look at this rally. What a beautiful rally. From October again, $1.71 all the way up to $2.57. A massive rally. Beautiful rally. Look at this beautiful breakaway gap. Maybe we can show the viewers this. That's nice. Sometimes you do find that the share sells off Next day, you get this beautiful gap to the upside. That's a beautiful reversal pattern because that gap is open. And can you believe it? Since then, that's in October, the gap remained open right up till now. But of course, let's have a look at the chart. The rally is still 100% in place. Let's have a look here. I mean, the support line of this trend is all the way. Can you believe that? I mean, this share looks very, very solid to me. Nothing points to me that there's some problems there. There you are. Momentum still beautifully to the top. We can maybe see that there's a tiny little rising wedge developing here. Rising wedge is always a warning formation, but the warning will only materialize if $2.48 turns into a resistance. Then I will get nervous. Otherwise, the chart still looks good to me. I will not say that you buy it now. In actual fact, I think it's maybe too late just now to rush into these stocks that had these beautiful rallies. But of course, I think my first warning signal will, if this chart tests this gap and it closes that gap, then it will maybe say to me that the momentum to the top is drying up. And that gap is between 253 and 246. If that closes, then you need to be nervous about the stock. Otherwise, it looks okay to me. Let's have a look at Tiger Brands. There's another viewer, but he's a trader. He says, Frans, I had a beautiful rally onto Tiger Brands. The share treated me well. Must I sell? Must I hold on? Well, if you looked at the chart here, there was already a tiny little double top warning you. It did sell off. It reached its target all the way. Let's maybe show you. There's the double top. It came into play there. There's the place where it came into play. And it played out almost to the T. There's the top to the support line. Let's have a look there. This is classic technical analysis, technical 101. Look at that. I mean, it played out to the T. There you are. Can you believe it? It went right down. There's the top of the head. There's the neckline. Plays out to the T. You do that extension. There you are. And the share is starting to see if it can maybe move up again. So if you did not sell it, have a look at this. First of all, there's the trend line. After the sell-off, let's have a look here. The momentum is still down, but what I like about the company, look at this. Beautiful, strong, bullish engulfing candle there. I mean, it just, on that support line, turned out to be a strong candle. That is bullish to me. So for me, I will maybe hold on to my shares if I did not sell it. And the viewer is asking for a sell. So where will I sell it? I think if you are a trader or a short-term investor, then you must maybe look at this. Below, there's the level below that support line, and that level sits at 206.88. Below that, I'll be nervous on Tiger Brands, but looks like it had its sell-off. It wants to bounce up. And I mean, if you want to buy it on the strong bullish engulfing candle, use your stop loss of 206.88. And where can it go to? It can go to 213.77. And by the way, there's a tiny little gap here. Let's maybe just show you this gap. I think we spend too much time on the share, but it's such a beautiful chart to show you. There's the gap. Maybe we can see this gap close between 216 and there you are, 216.70. There you are, 216.60 and 216.71. Maybe it can just close this gap on the rally to the upside. Well, the chart still looks okay. Let's have a look at Crookes. And Crookes Brothers in South Africa. The first thing I see immediately is look at these just dashes on the chart. And that always tells me that there's lacking some liquidity. So be careful. But I mean, this guy wants to buy the share. Let's go to a line chart just to see if we can see a bit of a clearer pattern. Unfortunately, my friendo, the momentum is still to the downside. Look at it. There's the high, lower highs all the way. Best to do here is first of all drawing a nice resistance line to see if the trend is down. Yes, the trend is down. Let's do another resistance line and see there's the trend still down. So for me, Unfortunately, it will only be a buy above that, and that will be above 34 Rand 90 cents. Stop loss, unfortunately, is big because there's your stop loss 31.46. But for me, maybe there's some better opportunities. I think let's rather look at something else, unless you know something that we don't know, but then buy above 34.80. I mean, your first resistance above that is 37.48, and then maybe all the way up to 39.81, but stick to that stop loss of 31.50. Let's have a look at Citigroup, the bank. Wow, everybody's asking about banks tonight. Well, look at this beautiful rally. Again, once again from October, $40.53, also listed on the New York Stock Exchange, had a beautiful rally, came back, a beautiful rally to the upside. Looks like it's taking a little bit of a breather now. For me, the chart still looks quite okay, but it needs to come back above that little resistance line. That resistance line sits at $51.42. Above $51.42, yes, it can move higher again. It can resume the trend to the upside. But guys, unfortunately, if the share breaks below that, and that is why I'm going to warn you quickly. If it breaks below that, that tells you that there will be loss of momentum. And look at that high, lower high, and then maybe another lower high here. And that will be below $49.98. Beautiful rally, I think too late to buy now. Rather look at some selling, and maybe if there's some other opportunities in the market that shares are being hammered down to pieces. That's the place to look for some opportunities at the moment. But I personally think Lloyds had a beautiful rally. There's quite a few shares that's telling us that they had some wonderful rallies. Maybe time to look at for some selling opportunities and some rare buying opportunities. Well, thank you for visiting and watching the show. Visit our website www.fransdeklerk.com for more info, and we will chat again.